To execute a debit spread option strategy, it is better to choose two options that are deep in the money, because the maximum profit in this option strategy occurs when both the options end up in the money on the day of expiry, and in the money options eventually end up staying in the money on the day of expiry. So these options could be either deep in the money calls or deep in the money puts. In this example, let us choose these two adjacently situated deep in the money call options. So in this strategy, what you do is you buy the costlier option and sell the cheaper option. So here you sell the 487.75 call and you buy the 520.90 call. Now, one important thing is you should note the difference between the strike prices of these two options, that is 50. Now, on the day of expiry, the maximum profit is attained when both the options end up in the money, and the maximum loss is attained when both the options expire out of the money. So first, let us calculate the maximum loss that you can incur when these two options go out of the money. So what you have to do is, first you have to subtract the cheaper one from the costlier one, that is 520.90 minus 487.75. So it will come to 33.15. Now what you do is you multiply this value with the lot size. Now let's say the lot size is 25. So the maximum loss that you will be attaining on the day of expiry when both these options expire out of the money is 25 into 33.15, that is $828.75. Now let us calculate the maximum profit. Now to calculate the maximum profit, you have to subtract 33.15 from the difference between the strike prices, that is 50 minus 33.15, which is equal to 16.85. Now you have to multiply this value with the lot size, that is 16.85 into 25. So the maximum profit will be 421.25. Now let's say you have taken 10 lots, that is 250 shares. Now to calculate the maximum loss or maximum profit, all you have to do is you have to replace this 25 with 250. So if you have taken 10 lots, your maximum loss will be $8,287.5 and your maximum profit will be $4,212.5. Now, as I've told you before, the maximum profit is attained if both the options end up in the money on the day of expiry, and the maximum loss is attained when both the options end up out of the money. Now, I've asked you to choose two options that are deep in the money, because it is a trading truism that the options that are in the money to start with will usually end up in the money on the day of expiry, and the options that are out of the money to start with will usually end up out of the money on the day of expiry. Note that when you use deep in the money options to execute this strategy, the loss will be more compared to the profit. However, you can use the same strategy on the options that are initially out of the money. The difference between the premiums of the options that are initially out of the money is usually small. So the loss you'll be incurring will also be small. Relatively, the profit will however be high. However, the probability of achieving profit in this case will also be small, since out of the money options usually end up staying out of the money on the day of expiry. This is a general principle in trading where when the risk is small, the probability of achieving profit will also be small. Now let us take an example and execute this strategy on out of the money options. Now let us take this example. You see the out of money puts here. Sell the cheaper one at $45 and buy the costlier one at $54.90. The difference between the premiums is 54.90 minus 45, that is 9.9. So the maximum amount you will be losing here is, if the lot size is 25 into 9.9. so if you have taken one lot, the maximum loss here is $247.5. However, the maximum profit, this is the maximum loss. Now let's look at the maximum profit. As I've said before, the maximum profit that you'll attain when both of these options end up in the money on the day of expiry is 25 into 50 minus 9.9. that is 25 into 40.1, that is $1,000.2. So to summarize, a debit spread option strategy executed on in the money options has high probability of success but low profit, and a debit spread option strategy executed on out of the money options has low probability of success but high profit.